Good morning, everyone, and welcome to the Quantum Leap morning homework session and trade plan setup for Thursday, March the 20th, 2014, day after Fed Day. What a great day it was yesterday. Our levels played out perfectly, our main targets. We missed that one extended target at 41.75 by one tick, and I apologize, I'm slipping. Anyway, this is Quantum Leap. We are a self-organized learning environment. We have a private chat room that's been around for over 4 years. It's not a commercial venture. It is a private venture. My name is Doug McKay. I am the founder and head moderator of Quantum Leap. Ooh. And if you want more information about Quantum Leap or want to come and join us on Skype, you can send me an email to d.mckay@stealthtrader.com. If you're watching this on YouTube after the fact, what we do here is we come together each morning to do our homework and set up our trade levels. And we start with the macro to the micro, so we look at the key numbers, then we look at the the trend from the macro to micro, and then we get into some more in-depth analysis. So we do this because we're preparing for our trading in the morning, but if you're watching it after fact, you might want to skip ahead and wait till we get into some of the more in-depth charts and start setting up the levels. Before I do anything, I got to get this out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used with trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in here are for education purposes only. Please trade your own plan, do your own due diligence. Okay, let's start with the key numbers and get them out of the way. Again, we've got the multi-highs. I call them multi-highs because they're multi-contract, but the real high, the all-time high, still is at 1887.50. That's been adjusted down to the June contract at 1880.50. And of course, we've got the adjusted RTH high at 1877.75. We are still holding above the open of the year at 1837.75. Our current month high is the all-time high in the March contract still, because we rolled over in the middle of the month. And then there's really nothing else that really jumps out at me. We did close at 1860.75 and on the previous month, and we are trading below it. But again, that's on the adjusted contract. Going over to the intraday, yesterday we opened up the Globex at 1864. We were right in that balance zone that's now above us again. We had a Globex high of 67.50 and a Globex low of 61, and then we opened auction in range at 65. Broke the IB to one side for a normal variation. We had a 3 1/4 point opening swing, high at 65 1/4, low at 62. Our initial balance was 67 1/4 and 62 with a 5 1/4, a little bit smaller than normal. But basically, that's because we were waiting on Fed. So we basically went sideways all morning until we hit the Fed news, and then we had fireworks, and we went down and hit our targets below us. 1230 number was higher, 66 1/4. The RTH high was higher at 67 1/4, but then we put in those lows after the Fed. We missed that one target. So I had my order sitting there too, my last contract sitting at 41.75, and they missed it by a tick, and it ended up, I had my stop at 47 1/4 for that last run, and I should have, but I thought maybe it would rotate down because we had that naked depop down at 40.75 or 40.50. Oh well, I mean, it was still a big day. We closed at 52 1/4. We said that we'd likely close in around 47, 48, or 53. Or 56. We closed right in the middle at 52.25. Our VPOC, we left value above us at 65 1/4 after 4 straight days of increased value. Range was 25 1/4 for the RTH, 25.50 for the full session. That's simply because we missed that high of the Globex by one tick. 20-day ATRs continue to expand out on the RTH, just under 16 now. On the RTH, just under just over 19.5 on the full session, and just over 10.75 on the Globex. Value area high was higher at 66.75. Value area low was lower at 53.75 for a 13-point value area. And that's mainly because we had multi-distribution day after the Fed, revalued the market, and we broke the IB to the low side, way outside of the pocket. And of course, that's normal on a Fed day. Volume was higher than normal. Again, on a Fed day, that's likely to happen. Taking a look at the ATR targets so far in the Globex, our full session high is 53.75. Our full session low is 44.75. So we have ATR, 20-day ATR targets at 1864. I'm going to call it 1864.50 because that's where the microcomposite VPOC is above us. And then we have an ATR 20-day target to the low side at 1834.25. Going over and taking a look at news, I was surprised that we did not get more of a move off of the unemployment claims this morning. But we do have existing home sales and Philly Fed coming up at 9 o'clock Central. So within the first half hour of trading, be careful out there. We also have leading index CB, and then we've got natural gas at 9:30, and then bank stress tests later on in the afternoon. But the big news will be the Philly Fed and the existing home sales. Let's go over and take a look at the trend, macro to the micro. You can see the monthly still very much, very powerful trend. We've gone a bit parabolic on the move up. We've got slope and separation on the 9 EMA and the 20 SMA. Trend is very much intact on the monthly. On the weekly, we still have this possible head and shoulder pattern. We are coming down, and we tested the 9 EMA on the weekly and then bounced off of it. But we are seeing a little, seeing a little bit of weakness coming in. But just keep an eye on this developing pattern. Don't know if it's gonna play out or not. But you can see we're holding the trend. We've got we've got slope. We're losing a little bit of separation with the 9 EMA coming sideways here. So we're seeing, a little bit of a halt of the trend, but the trend is still intact on the weekly. So don't get your short hat on just yet. And then on the daily, we had broken down, created this technical gap right here, closed the gap up, tried to get above the 9 EMA and the 20 SMA, and then in the last 2 days, they've brought it back down, and we're currently trading below the 9 and the 20, but we do not have slope and separation. We have an MA hug going on, and that usually means that we are at a decision point. Hold on a second. Sorry, I got a frog in my throat. All right, so let's take a look at the geometric chart. I added this downward sloping fork last night on the 4-hour. And got a couple energy points, or a energy point that I'll be watching right here, which is at 1849, or actually 1850, and that is scheduled to hit on the 24th. So basically, right about the same time that we've got this other energy point down here, and you can see that this new fork is coinciding with the energy point here as well. So if we break below and break out of the lower line of the upward sloping fork, this is the long-term fork that we've been watching for many months. And if we break back below that, I'd be looking for the likelihood that we could see some weakness and come down here. But if we hold, I still think that there's work to do above us, and we do have easily areas that we can go and test to the upside, which I'll talk about when we get to the composite. For today, though, you want to watch this level right here, this 46 level. It is a key CLVN as well, and if we break below it, look for a possibility of coming down here and testing this center line of the new downward sloping fork in around that 1831, 1832 area. If we get and we hold above the long-term lower line of the upward sloping fork, retest of the upper line of this opposing fork, and the center line of the intermediate upward sloping fork will bring us up to this level right here at 1861 area, and a little bit of an energy point here. I'm really not convinced of the frequency on this particular downward sloping fork yet, but I'm going to watch it and see how it plays out. And but I'm really watching, the center line again, because we're likely, once that we broke below it, we're likely to come up and retest it from below and either get back above it or fail. And if we fail off of it, I think we're going to see a major failure and it come down to this possible energy point. But let's take a look at what that looks like on the composite. Now, I did some playing around with my micro composites, and I've drawn them the way they are. I mean, you can add these 2 days into this particular micro composite, and I can take this and bring all of these days in, but it doesn't really give me more information. What I really wanted to see is where they found value, below us, which is, once they fell out of this balance zone and came down and found value in around this 51. And then you can see that they were trying to hold up here at the 64.50 again, but the sellers just kept on piling in and they wouldn't let them get any higher. So, I mean, you've got, the 3 key areas that I'm watching right now, which is the, 64.50 above us, because it's, the microcomposite VPOC from the balance area that we fell out of and then came back up into. And again, if I bring it over, it is still the most accepted price within the date range going from the breakout of March 4th through to yesterday. But again, I don't need that drawn there because I'd rather see it as we stepped up and down. Of course, we came down to this 34 area to pick up buyers. Buyers stepped in pretty strong, came up, accepted value here around 51, tried to make a move back up to the 64. Sellers stepped in and capped us, and then we went back into price discovery on the revaluation from the Fed news and came all the way down to this 41 area, which is the value area low for the days in balance down here. So I've got to just bring my CLVNs, and I took these off last night just to get a clearer picture, but I'm going to bring them back on because we want to watch our levels. So the key area for me today is going to be this 46.50. If we cannot hold 46.50, then I'm looking for a rotation back down to test the value area low down here at 41.75 again, with a more probable rotation down into this 34.50 again. And remember that our 20-day ATR target is 1834.25, so that corresponds with this level here. We do have the wick from yesterday we've got to worry about, and we could just chop around as they battle and properly auction this wick from yesterday. But below 46, I'd be looking to get short into 42. And then if we can't hold this 39, remember how important that 39 was? If we can't hold that 39, then I'd be looking for a move down to 34. And then once we get down into this 34, I think that you're not going to see, we've already been to the well a couple times down here. I think you're going to see us come down here and start chopping around between this 25.25. Remember, 25.25 was that microcomposite VPOC that was between the December 23rd and the January 23rd balance. And then, we created this triple distribution, which is what I call undefined fair value, and we're likely just to chop around here with a push through to the other side of balance down here at 21. The big line in the sand, of course, is going to be down here. If we, don't start finding balance back in this distribution area, which I I expect to happen. But if we don't find it and more bad news comes into play and we break below this 21, the big destination below us is down here at this 1807.50, where they accepted value when they broke out of that range in around what was that in the March contract, the 1781.50, which has been adjusted to the 1772 area, and that's the big destination below. If we break 1800, we're going to come all the way down here because there really isn't much to hold us up, and they're going to have to come down here to find buyers with more conviction. If we hold above 46, then look for the rotation back up to the current value around this 51 CHVN and microcomposite VPOC with a push up to this 55. 52 I don't think is going to be, that 52 area to 53 area I don't think is going to be as important anymore. I think it's shifted up here to this 55. 55 because this is the range low of the value that we fell out of, and if we get above that 55, then I'd be looking for a rotation up to the 61.50 area, which is the value area low, and then if we can get back inside that value area and above the 62.25, they're going to come back up to the 65. And then if we get back up here this time, I think the buyers take control and stay in control and get a push through to the other side of balance at 71, which is now the value area high of the microcomposite and the CLVN of the other side of balance around that 64, and then anything above that, look for that 77.75 and the equalization of the Globex, the adjusted Globex and adjusted all-time high between 77.75. Sorry, did I say Globex? Sorry, the RTH 77.75 and the Globex all-time adjusted high at 1880.50, and then most likely, beyond that, a balance of the two contracts between the 80.50 and the 87.50 and a takeout and a new all-time high. But I don't think that's in the cards today. I think we either get stuck in this area, or if we break below, a rotation down to test 42. If we break the 39, down and chop around down in the zone down here. If we hold the 46, then I think we chop around with a upper rotation up towards 51, and if we break 55, a rotation back up to 64.50 area. Let's take a look at the Globex, start putting our numbers over. Our current Globex high right now is up at 53.75, which is right there at the value area low from yesterday. Our current low is down at 44.75. And our current VPOC is right around that CHVN at 48. All right, get rid of this. Stretch this out a bit. All right, so like I said, 46.50 going to be a level that I'll be looking to trade off of. Failure to, we're going to open up inside of the range from yesterday, but outside of value. So if they get above 46 on the open and they can hold it above, look for a rotation to the first target. Now, right here at the 49, but it's really going to be this 50.75, 51 area. But I'm going to put the target right at the CHVN at 49.75 because I want to front run that 51 and make sure that I get filled. And I should have done that right here yesterday when I had my target at 41.75. I should have front run it and put my my contract at my last contract at 42.25, and I didn't, and it cost me. And then if we get above that 41, look for them to go to the other side of that balance, up around the 52 area, and take out the naked close. The naked close is at 52.25, and the overnight high is the 53.75, and they're likely to take out the overnight high. but the way it's looking and the weakness I'm seeing, we're probably likely to take out the overnight low first. But let me just finish the upside rotations. So the main target above this 49.75 is the value area low here at the 53.75 overnight high. So that is going to be a target. And then the other side of that is that 55 and a quarter. So 55 and a quarter is going to be the other side of that, and I'm going to be looking for responsive sellers to step in there and try to take us and hold us outside of the value. So they're going to try to break in the value, take out the overnight high, take out the naked close, and then try to push into value. I think at 55, and between this 53.75 and 55 and a quarter, they're likely to try to hold us outside of value and a rotation back towards that 51 and the other side of balance at 46. Above the 55, then we're inside of value, we're accepting value, and then I'm looking for the rotation up to the upper distribution up here. I'd be looking for your first destination at that 58, which is right where the VWAP was for yesterday's RTH. And then if we get above that, it's a 60-50. 60-50. And then above that, of course, then I'd be looking for a move to take out the naked VPOC at 65 and a quarter, with 64 being an area that I think if we get up here, it's not really going to be a trade area. They're going to accept that value again at 64. So I don't think it's going to be as powerful sellers stepping in as them just coming up and accepting the value and then just chopping around the 64 like we did before we fell out of balance once the Fed news opened up. So basically the area above that I'm watching is the value area high and the range high from yesterday and the range high from Tuesday in the 67 to 67 and a quarter area. So that's going to be my trade area that I'll be watching above. And then of course above that we've got the other side of balance at 71. And then we've got the 77.75, which is the RTH all-time high, with the 80.50 as an area that you'd expect to have a strong response from the sellers. But, I don't think we'll get much higher than the 64. I think if they are able to get up there and get above that 55, that key area, above us at 55, then I think we just do a chop drift up and then accept value up here at 64. And then once we spend the day accepting that value, then we'll be looking for a Friday drift up to those other highs. But we are seeing some weakness. Any more weakness and a failure get back above 46, then I'm looking to take out the overnight low with the 42 as my first target below. Which actually, let's make it a trade area as well. It's a target. Remember, the trade areas are targets, but they're also areas where you can add on or enter if you haven't done so. So it's a trade area and a target. And then below that, we've got the 40-50 naked 40-50 naked VPOC, and then the trade area below that is this 39. I'd be looking for them to try to hold us above 39. And then below 39, the big destination and the big target, the main target below us today is going to be down here at that 34.50. We've got a naked close right here at 32.75, and then the next destination below that is going to be, so you can look at possibly, I would be using this 29.50 myself as a possible area for a bounce off of. even though it's a CH band. But if we come down here strong, they're likely to get a good pop off of this for the first time, and then come up and try to break back above 33. And then if we fail, then I think we come all the way down to the other side of balance down here at 27, and the main destination below is at 25.25, and that's my extended target below. Preferences. I got to get myself an extended target button. All right, and I don't think that we'll see much more than that, but you know, the other side of the balance is down here at 21. Always have to have a plan for the extended session, and the target below there, which would be really an extended target, and a major breakdown would be that 1850, and then you know, the big number down here at 1807. But I think that's a little bit far for us to go. So let's take a look at where we are in the Keltner with the Renko. All right, so we are below the center line of the Keltner, which is at 48, and just below our main target at 49. So if we get above 48, there's your target, first target above at 49 if we get above the Keltner center line. If we hold below, test of the lower Keltner is going to take us right down to test the range low and the swing low on the close from yesterday, and that key 4175 area, but I'm using 42. They will fool me once yesterday, they won't fool me twice today. Of course, if we get above the Keltner center line, test of the upper Keltner is going to take us up to 54, and take out our overnight high and our secondary target above us. So nicely, got some nice confluence there. Let's go over, I want to take a quick look at gold. This is starting to set up nice. Of course, we are watching this cup and handle. We're waiting for us to come down and validate the handle of the cup anywhere between this 1311 and this 1261. We're coming down. Look for the first possible bounce here at 1311. And again, once we get down here, then this cup becomes valid and will remain valid until we break below the 1260 area. And if this does play out and we do validate and we break above that 1392 upper right rim, then we've got a measured move all the way up into 1600. And it plays very well, as I've been mentioning now for a while, that this descending broadening wedge is a major bottom pattern, and likely come down, retest this area, and then if we break above, then I think all the gloves come off and we see a much bigger move. There are others that are looking for a move back into the 1100s. Well, if we break below the 1260 area, I can see some continuation. This pattern then becomes invalidated, and we see a further continuation down. And let's take a look at what that looks like on the composite. You can see that right now we're in this distribution zone. The main target for today below us, we just bounced off of. You see how this works out? We went in, we fell out of balance. We came down to the first area of price acceptance below us. They didn't hold, they're pushing through. They come down to the second area. We'd already used up our inventory here, and we're coming down to test the 20 area. We bounce off that 20 and coming back up. So we've got a range today between this 34 and this 20. If we break below the 20, the big number below us is this 1350, with the 1300 being the other side of balance. And below that, we've got the big number below us down here at 1288, and this still plays right into validating that cup and handle. And then below that, The big number below is this 1257 area, 1260 area. And anything below that, I'll give this pattern, this cup and handle pattern, all the way down to the 1257, 1258 area. But below that, then it's invalidated. And I think we come down and test this 1240 area, which is the big number in the 1200s that we have to come down and hit if we can't hold above the 1265, 1261 area. That's what I'm looking at. Howard, do you got anything for us this morning?
Yeah, I can go ahead and cover a couple things.
Okay, over to you.
So first thing we'll look at is the sectors. We can see that utilities had a strong push up to take the leadership for the year, but in the last few days it's shown some weakness and is now back down in second place. We can see that the most of the sectors turned down a little bit yesterday after the FOMC announcement. So, not a lot of change there other than the leadership in the sectors. We'll look at the advanced decline, up-down volume, non-balanced volume here. Okay, so after yesterday's action, the advance versus declines have now, on a 10-day average basis, moved below the break-even level. So we're continuing to see more weakness in terms of stocks participating in the move higher. Up volume versus down volume here, a touch weaker than advances versus declines. On balance volume, however, is pretty much mirroring the stock price action. So as we've been noticing since this low here, on balance volume is confirming price. Advanced declines and up volume versus down volume are showing more weakness. So again, we still have a bit of a mixed picture among some of these indications of the market. So let's look at our daily chart. Okay, so here's yesterday. After we had this key reversal candle, we had continuation on the 18th, and then we have this is FOMC day yesterday. We had a bearish engulfing and a close back below the 9 and the 20, and in fact we actually have a cross of the 9 EMA below the 20 SMA at this point, and then during the Globex action overnight, we have a test of the 9 EMA with a little bit of rejection off of it. So, a little bit of weakness has come into the market since the FOMC announcement. We do have the moving average cross. So that'll be a key area of resistance to try to break above if the market's going to be moving higher today. And that's around the 1855 level. Quick peek at the week. So in the weekly chart, last week we had this bearish engulfing. This week we had an early challenge below the 9 EMA with a strong rejection, looking to possibly catch the top of the bearish engulfing candle, and then yesterday we're retreating a little bit. So key support level will be down here at the 1835 to 36 level, which is where the 9 EMA is and where last week's bearish engulfing pattern came down to. So those are the levels I'm seeing. I'll turn it back over to you, Doug. Doug, did we lose you?
Sorry, I had my mic on mute.
Okay.
I forgot to take it off. Okay, so here, let me just change presenter and quickly, we've got a little bit of a change here, so I just want to show it. All right, see my screen?
Now we do.
Okay, so we've basically just come up and tested this 49.75 right now. So we're going to be opening up inside of range, inside of this 46.50 CLVN, and it's going to get choppy on the open. So 49.75 will get taken out, pretty sure of that, but we're likely to test this 46.50. It's the 46.50 you want to watch. If they can hold above it, then look for, if you see buyers coming in and you've got delta rising, you can take the long off of it, okay, and take it back into this 49.75. We might see some initiative buyers stepping in right on the get-go, and we might not even test this 46.50. I think we're likely to. And then if we bounce off of that, then you can take it into the 49.75. Be careful. Don't try to just jump into a trade right here, with where we're trading right now. There's going to be a lot of two-way action as they fight it out. But I would take the 46.50 if you see the delta and you see volume coming in and the buyers coming in. If they see that they're failing at this 46, get short into 44.75. Make sure you get funded before you get to 44.75 with a probable continuation down into this 42. My main hypothesis is all based on whether we hold this 46.50 or not. If we hold it, my main hypothesis is a rotation back up to take out the overnight high and test this 55 area and probably just chop around here. If we get above 55, a continuation and get back up towards that 61 and 64 level. I think if you cannot hold this 46.50, then we're going to see lower value and we're likely to drift down towards this 34.50. I don't think we're going to hold this 42 area again today if we come back down and retest it. But so far, it's looking like they're going to hold that 46.50 and then get that rotation up. Anyway, as always, trade well, trade safe, and we will catch you on the flip side.